Mark, just having a conversation there about global asset flows. I suppose the markets at the moment, though, they just feel as if they're all about that marginal news flow, marginal trade news flow. Is there more to markets right now?
I think trade has clearly been the dominant story, and I think in terms of that marginal news flow and trade, we have known since Liberation Day and then the subsequent 145% tariffs in China that the marginal news flow could only be positive from there. It was positive into a structural, tough story on trade, but that was where the marginal news flow is. I kind of am in the camp that yesterday was an inflection point, where from here, the marginal news flow on trade specifically can only be negative. Given that we've seen such an aggressive reduction on the prime trade target for the US, that means that everyone's expectations that everyone will get a good deal. But on the flip side, we know that both from the UK and China that 10% is seen as the new minimum, and that also this is only a suspension of the higher level of tariffs. It's going to take a long time to get concrete kind of material deals over the line, which means we're still heading into a world with a much, much higher average effective tariff rate for the US than existed a few months ago, which means the cost of business in the US is much more. And therefore, not only do we have the structural negative story that's been there for the last couple of months, but we've gone from a marginal positive news flow story to, from here on out, a marginal negative news flow story on trade specifically.
Mark, I'm exhausted. I'm pretty sure you're exhausted. Are the markets exhausted?
I think they are, definitely. So what happens in that environment? I think that means that no one wants to trade a bearish view very aggressively. And also, I think there's a lack of enthusiasm to run higher on this bullish story. You can't argue the fact that there were higher expectations yesterday and Besant still exceeded them. But the fact is there's only a suspension. We don't have much concrete kind of wins yet. So therefore, the trade scenario is still quite negative in the backdrop, which is why you're seeing poor price action in crypto and Hong Kong stocks, in the dollar. There's lack of enthusiasm to take this clear win from yesterday higher. So I think from here, we're a little bit of in kind of waiting for the next catalyst to go somewhere, which is why we might bounce around in the short term. But to me, the structural story turned materially more negative a couple of months ago. And that's the longer term story. We're still trading and nothing has changed on that.
Mark, very quickly, where does that leave the dollar? We were looking at financial conditions indexes. They've come back up because the stock market, the credit market, and arguably commodities markets has shown up yet. The dollar is lagging. What does it take for dollar bulls to win here?
They won't win, ultimately. The long-term dollar decline has been set in motion by Donald Trump a couple of months ago. It was when he first undermined the Fed and with his trade war, making it more expensive for American businesses. So we have a world that was overexposed to the dollar. This is not all to put it all on Donald Trump. He was in a situation where the dollar probably was set up for a decline anyway. He just provided the spark, the catalyst. The long-term dollar downtrend is in place for the next couple of years. Over the next week or two, I have no idea, but dollar bulls won't ultimately win.